What are you expecting from Jay Powell today? How do you see the market moving or not moving in the hours up until that 2:30 press conference and that 2 o'clock decision?
Yeah, I think it's widely expected that the Fed's basically going to be on hold right now, but everybody is really going to be waiting on pins and needles to see what that rhetoric is for where they are going forward, right? Because we have now had 4 months in a row where inflation is showing that it's between 2.4 to 2.6%, which is clearly higher than that 2% target. That's why everyone's thinking they're probably not going to cut here as soon as people hoped. But it's also not so high that I think they're likely going to talk about cutting rates. I think you're hearing more and more rumors about people just getting nervous about that. But we're kind of in this weird in between right now where it's not getting down to where we want. I don't think talking about rate increases, I think that's way too preemptive right now. I think probably the next move is still going to be down, just later than people hoped.
All right, so we're 1 day away from seeing that year over year, in Q1 at least, wages increased by 4%. The average over the 10 years before the pandemic, it was about just over 2%. But right now, your Wex word of the day, you're worried about stagflation.
I'm not worried about stagflation. I think that is absolutely the hot button that's on Wall Street right now, right? Everybody is talking about that. Is that the concern? I don't think it's something to be concerned about, but you're absolutely going to be hearing people talking about that. The reason we don't think it's necessarily a concern is because you are continuing to see GDP numbers are strong. We're seeing GDP increase about 3% year over year, which really negates the whole stag part or stagnant part of stagflation. And because we're in this growing economy, the consumer is still strong, wages are growing, people are able to sustain this higher inflation. That's why we can keep going even if rates stay higher for longer here. So I don't think this is a concern. When you look at where rates are, historically speaking, they are still low. They have been able to sustain very positive periods of the economy when rates are where they are. So you're going to hear more and more people mention stagflation. I would not worry about that.
All right, so one of your picks for us for today is the defense sector. So I was actually taking a look at the ITA, one of the more popular defense ETFs. Since October the 7th, that was the Hamas attack, up 25%. The S&P's up about 17%. But I do want to ask you, are you concerned that when it comes to defense, a lot of these gains are already priced in? I mean, we've seen unprecedented attacks, we've seen disruptions, and still, I want to say only 25% higher, but it seems like oil and defense would be considerably higher.
Yeah, and I think there's really two reasons that these are going to price higher. Number one is on the headline. So anytime you get these geopolitical unrest, you are going to see defense stocks are going to price higher, which is what you've seen. But earnings growth is actually looking to be very impressive here. You're talking about 24 to 26% earnings growth this year and next. And that's what you want to take a look at right now, where a lot of your industries that are high growing are likely going to be decelerating when you look at 2025 and 2026. This is an area where the earnings growth is likely going to continue to improve, and that's why you want to take a look at it.